Alrighty, Saturday afternoon. We're making it through. So our next speaker is Kate Lee, a data scientist from Electric Capital, and I'm very excited for this talk. Electric Capital has great data, great reports. If you're not familiar with the annual Electric Data Developer Report, and sorry if I'm stealing some thunder here, but you should check it out. It's one of the industry-leading reports. So please welcome Kate.
Hello, everyone. It is my great honor to be here to share with you some of the exciting research that we did. Let's start off with something that is non-crypto. Back in Hollywood's golden age, success was measured by box office revenue alone. And then came the blockbuster era when opening weekend revenue became important. Home video sales, merchandise, franchise expansion, think Star Wars and Jurassic Park became an important part of it. Now fast forward to the digital era in the 1990s, critics' scores started influencing box office performance. And the streaming platform disrupted the traditional revenue model, asking for new metrics of success. And today, when we think about a film's success, it's so much more than box office revenue. It is about the viewer counts on streaming platforms. It's about social media engagement, awards, critical reception, and cultural influence. All these metrics shape a film's legacy. Box office revenue, something that once told the whole story, now only tells a fraction of it. We saw the same shift in the technology era. In the early days of the internet, the success of a digital product is all about eyeballs. Unique visitors and page views were king. And then fast forward to the 2010s, companies start to realize that they need better models of monetization, thus leading to monthly active users, daily active users, session duration, cost per click, cost per action, etc. And today, with subscription services, SaaS, and e-commerce, we're tracking even more sophisticated metrics like customer acquisition cost, retention, churn, lifetime value, etc. Yet in the space of NFTs, we're still very toned in on two metrics, the trading volume and floor price. These metrics really only scratch the surface of what's really happening. So what do we go from here? Today, I'll introduce several multi-metric frameworks that helps evaluate the success of a chain, of an NFT collection, and an NFT marketplace. A multi-metric framework that steps beyond trading volume and floor price to create a more meaningful picture of success. So let's start with chain metrics. Think about the life cycle of an NFT. It really starts from deployment, where a creator deploys a contract, and then followed by the minting process, where the token is officially recorded on chain. Once the token is minted, it can be traded on secondary marketplaces, or it can be transferred between users. By tracking the metrics at each step, from deployment to minting to trading, we can gain a more comprehensive understanding of the NFT adoption and usage. So let's take a look at a couple examples from each of these categories. Starting from deployment. Monthly deployments surged from 36K in October 2023 to 172K in October 2024 across all chains. And this is a fourfold increase, more than fourfold increase. And interestingly, most of this deployment are happening outside of the Ethereum mainnet. In January 2023, 70% of the deployments are on Ethereum, but that number had plummeted to less than 0.5% by December of last year. And since April of 2024, 90% of those NFT contract deployments are on Base and Zora. But this is just the first step. What happens after deployment? As we can see here, the NFT minting is also on the rise. The minting volume hit an all-time high in December 2024 at 2.8 billion minting volume. US dollars. And by stretching that out in an area chart, we can see that 94% of that volume since mid of last year happened on Base. And what is being minted is also changing. In 2024, the NFT collections being minted go far beyond arts and collectibles. So here we have the most minted NFTs in 2024. We can see that the categories extend beyond art, and it goes into finance, rewards, identity, gaming, and so much more. And in fact, every one of us here, we are NFT users. We have an NFT in our wallet, and that is the ticket to ETHDenver. And we can see that the use case of NFT is expanding. At its core, NFT is not an asset class. It is not PFP. It's not art, not collectibles. There are token standards. There are ways to encode unique assets onto a blockchain. Any digital asset can be represented by an NFT, and any physical asset can be mirrored on-chain. The data we're seeing just shows the diversifying and expanding use cases for NFTs. So with that in mind, let's take a look at volume. Ethereum commanded 57% of trading volume in the last year, but deeper look at other metrics reveal a more nuanced picture. If we see the active trading wallet, Solana is leading in user engagement with 1.6 million active trading wallets in the last year. And when looking at creator sustainability, Solana generated $34.1 million in creator royalties. And Ethereum is closely following that at $33.7 million. So we can see that although Solana only commanded less than 15% of market share in trading volume, Solana shines in other metrics like user engagement and royalties. Now, with that multi-dimensional mindset or perspective in mind, let's take a look at what defines success of an NFT collection from the perspective of different stakeholders. So first, for creators, what matters could be the mint-out rate, the royalties revenue, or a holder engagement. And for a holder, key metrics include unique holder concentration, the utilities, and the benefits of holding. And for traders care much about price volatility and the market activity that's going on. So let's take a look at an example from each of these categories. Creator royalties really provides the ongoing incentive for innovation and creativity. And in the last year, MATLabs generated $5.7 million in royalties from secondary sales. And this demonstrates that a creator-driven ecosystem could go far beyond initial sales. Some of the other collections that is performing well in this metrics include Pudgy Penguins, Courtyard.io, Retardio Cousins, and Tensorians. Another interesting metric is ownership concentration. So as of February 24th, which is 5 days ago, Doodle stand out as a highly concentrated collection, with the top one holder holding 35.1% of the total supply. That's raising a lot of questions about market liquidity or decentralization. And when we look at Azuki actually is a less concentrated structure, with the top 5 holders holding 8.9% of the total supply. Still raising some questions, but not as much. And when we look at Pudgy Penguins has a pretty decentralized structure, with top 5 holders holding less than 5% of the total supply, suggesting a strong user engagement and reduced risk of market manipulation. So let's take a look at trading volume. Oh, there's a typo here. It should say by trading volume. Since November 2024, the trading volume surged due to blue chip collections on Ethereum, including Pudgy Penguins and Bored Apes. And these trading volume of these flagship collections not only provided liquidity within these collections, but also created more market activity in all the other NFT collections and throughout the NFT space. So now let's talk a little bit about where the NFT collections are traded, the NFT marketplaces. For the NFT marketplace, we can really evaluate from a user's life journey with a marketplace, starting from acquisition to engagement to retention. So let's illustrate this multi-metric framework with a timely example. OpenSea launched OS2 on February 13th. And let's use this framework to evaluate how effective this launch event is. Now, starting from acquisition. So really, for a user who's interacting with a platform like OpenSea, their first activity usually starts with a trading activity. So the first question we ask is, how many new wallets started trading on OpenSea? And plotting this out, from the start of the year, we see that the daily new wallets 6x'd from 1K on February 2nd to 6K on February 12th, and hitting a peak at 7K on February 16th. But this is not telling us much about the deeper insight. So we've broken it further down to see, are these wallets coming from other marketplaces, or are they new wallets onto the NFT trading platforms? And by breaking that down, we can see that most of these wallets are first-time trading NFTs, which means that OpenSea is grabbing new users instead of trying to pull traders from other competing platforms. Now the next important question is OpenSea getting a larger market share of the new wallets that's trading NFTs? So next up, we plot out all the new NFT trading wallets through all the marketplaces and broken it down by marketplace. We can see that despite a couple of Magic Eden launch events, daily new wallets stays rather stable at around 8,000 wallets per day. And OS2 launch event had a little bit of spike, but a deeper stretch out. And to see the market share, we see that 37% of those wallets traded on OpenSea first on January 1st of 2025, but that number has increased to more than 50% since OS2 launch event. This is a sign to me that OS2 was effective in attracting new wallets onto the NFT marketplace. So now, next, there is another question that comes up, which is, how about the wallets that's already trading on OpenSea? What about the active wallets? So let's plot that out. So we see the daily traders on OpenSea dropped a little bit from 15K during the first week of Jan to 10K first week of February, and it bounced back to around 17K during the week of OS2 launch. This is a rather moderate increase. So what can we say about these wallets? Or another question in my head is, did OS2 win back wallets that has been inactive for a while? So we break it down. We broke down all the daily active wallets by new wallets versus recently active wallets versus reactivated wallets by how long they have been inactive for. And looking at the chart on the right side here, we can see that most of the wallets, in fact, 70% of the active wallets on OpenSea are either new wallets or wallets that has been recently active. And the OS2 launch event doesn't seem to change that by much. So this tells me that this event did not attract back wallets that has been inactive for a while. So we're starting to talk about retention here. So let's talk about retention a little further. An important retention question is, are wallets sticking around? And one way to look at that is by looking at a daily active wallet over weekly active wallet ratio. You might have heard this term as DAU over WAU, or WAU over MAU, which is weekly active user over monthly active user. They all tell the same story. A higher ratio indicates a more engaged user base who keeps coming back. And from here, we see that OpenSea stays at the same level in terms of stickiness with the other major marketplaces like Blur, Magic Eden, OKX, and so on. And if we look at OpenSea, which is really the middle line in between, OS2 launch did not really get the stickiness up for OpenSea. And one interesting thing on this chart is that More leads the pack with around 40% DAU-WAU ratio. It has the strongest stickiness out of all these major marketplaces. So here is another way for us to look at retention, is through a retention triangle. Each row here indicates a cohort of new wallets that joined in a specific week, and each column indicates a percentage of those wallets that remain active over time. And a diagonal is a specific week or point in time. And I've highlighted OS2 launch week in pink there. And from this chart, it seems like OS2 launch event was effective in retaining the users that joined in 2025, which is the bottom few rows there, indicated by a brighter or like a darker blue color, but not so effective for the older wallets that joined before that. So let's wrap this up with this case study. Overall, it seems like OS2 launch event was effective in attracting new wallets and retaining wallets that joined in 2025, but it wasn't effective in gaining back wallets that were active before 2025 or improving stickiness overall. And think back to how little we talked about volume or floor price. This study really further demonstrates that metrics beyond volume and floor price could give us a clearer picture of how success looks like in the NFT space. All right, so with some of the other more diverse metrics for marketplaces, like users, royalties, trading revenue, collection diversity, and volume, we can see here that Magic Eden and OpenSea are really winning in the multi-dimensional framework that we're trying to build here. So let's wrap this up. Here are some of the key takeaways that I would like you to get around with after this. So first, we need to look beyond volume and floor price. Keeping our eyes focused on volume and floor price does not give us a full picture of utility and community engagement. It is usually limited in scope, and it's easily manipulated. So the solution is a multi-metric framework. We talked about for chains, we can look through the NFT lifecycle from deployment to minting to trading. And for collections, we can look at the different perspectives of stakeholders, from creators to holders to traders. And for a marketplace, we can follow a user's lifecycle from acquisition to engagement to retention. And third takeaway is that this multi-metric framework applies to NFTs and sectors beyond NFTs. Just take DEX and lending, for example. The total value locked, or TVL, is not a definitive measure of how much usage is being present in the protocol. For tokens, the price does not necessarily tell us how much utility is present in the protocol. So employing this multi-dimensional, more nuanced framework is going to give us a more meaningful picture of true adoption and engagement. So that is my time with you today. I wish I could be here longer, but for more data, you can find most of the charts that I've presented today at nftpulse.org. This is a public product that we're making, and to show analytics to everyone who's interested. And here are my contacts if you would like to keep in touch or talk analytics. There is also the contact of our awesome designer, Misha, who helped put this beautiful deck together. Thank you very much.